Hi, James. Nice to see you again. Thanks for having a chat with the property.biz today. Um, One of the processes I start, nearly the first thing I do with my clients is I talk about the relationship that they have with their finance, who's managing that and who's looking after them. Um, it's such an important relationship, isn't it?
Look, it's incredibly important, and it's incredibly useful simply because we're both on the same side of the table. There's no conflicts. We're both effectively acting for buyer, so it can be an absolute free exchange of information from all parties to make sure that we're all about to get our mutual client the best result we can. And the more experts in your pocket, so to speak, the more likelihood you're going to have of getting a really great outcome. So it's crucial. I love working with property buyers because they know what they know.
Yep.
I know what I know, and we can transmit all that information and knowledge to our clients so that they end up winning.
That's right. Look, I see it. I see it as we are a team. I bring the client. I get the client. I work in with the mortgage broker and usually their lawyer, their conveyancer, or their solicitor. And so you're building a team around your client that is supporting them to achieve their goals, and with the amount of industry knowledge that we all bring together to the transaction, the outcome can be really amazing, can't it?
Oh, look, no question. As I said, I think pretty much 100% of the clients who've used buyer's agents have been very happy, simply because you don't know what you don't know, and when you're involved in buying property, you're dealing in big numbers, and any error can be very expensive, and mistakes can be incredibly expensive to fix. Worst case scenario, you haven't been talking to your finance guy or girl, you haven't got your approval squared away. You buy your property at auction, you pay a 10% deposit, and then you find out you can't borrow what you thought you could.
Exactly.
You're at risk, your deposit's at risk. It's just a disaster all around. If you're spending a couple of $1 million on a property, you're dropping 200 grand just because you didn't do your homework. It's a pretty bitter pill to swallow, and sadly I've seen it happen. I've had clients who've come to me with, can you help? And I've been in a position to say, well, sometimes I can, sometimes you can't. But if they'd had that conversation prior to the auction, it would have been a different story altogether.
Exactly right. I think sometimes too, people, they think that they have their finance all sorted, but with how the market's changing and the amount of information that needs to be provided, I see using a mortgage broker is such an integral part of the process, because you go into the market, don't you, and find something.
It's a fast moving feast at the moment. I mean, every time there's a rate rise go, in an upward trajectory, potentially your borrowing capacity is reduced. So if you get a pre-approval, what are we now? September. If you had a pre-approval in July, it's not worth the paper it's written on to a large degree, because that won't reflect your borrowing power today. If you'd need to have a proactive broker or lender or whoever you're talking to who's continually reassessing your ability to borrow based on the new parameters. So, if you're borrowing at your maximum limit, that's a different number by the time, the auction may come around. So, you've got to be so careful. It's not such a big deal if you're borrowing well within your limit. Obviously you'll have capacity to absorb, any limit reductions, but someone who's out there buying, they think they're good to go, they're not good to go sometimes. And that, once again, becomes a problem where you can't complete, deposit gone, expensive lesson learned.
Yeah, very, very expensive. And, some of these products have expiry dates, so you can't push out timelines. For instance, say if you're buying off the plan, a lot of
Absolutely.
timelines are being pushed out a lot because of the new advent of the building commissioner coming into play in New South Wales, where they're not readily signing off on new builds as much. You know, they're making sure the developers are doing, you know, before they walk away from the deal, that everything has to be done. But what's happened with that is, say if you're a first homeowner, you know, your pre-approval could have expired.
Well, look, if you're
First
buying
time
off the plan, and you've got more than a 3-month sort of time frame, once again, no pre-approval is going to survive past that. You need to be able to resupply your documentation. You need to be able to confirm to the issuing lender that you can still afford that loan. They're under no obligation to approve it for you. You have to still tick all the boxes. Now, once again, if rates go up, bang, suddenly your borrowing limit could reduce. If, for example, you know, you had a pre-approval, you know, you bought a property off the plan 2 years ago, and suddenly it's due to complete. You know, your partner may be off work, you may be sick, you may have changed jobs, you may have changed in your salary, you could have started a company. There's 100 different variations that come into play, and any approvals you had at the time are, you know, irrelevant. It's basically, you need to be able to service a loan based on your situation right now today, and you need to be able to evidence it all and then go through that loan approval process all over again. So, you know, that risks with everyone who buys off the plan. Now, if you're in a stable job, stable business, you know, and you've got plenty of borrowing capacity, plenty of assets, you know, you can probably make it work, but not everyone's in that position. So, you know, you just need to be very careful about entering into that sort of contract if your financial situation isn't absolutely blue ribbon.
That's right, exactly. And I think too, you know, with the working relationship with a mortgage broker, and you know, obviously when I profile a client, when we're looking at what they're looking for in the market, it's really important to know what their upper safe limit is in their borrowing capacity, because that, for me, that can change the dynamics of what we're looking for, and where we end up with the type of property that we end up in the end.
The first sort of conversation we generally have in that situation is virtually identical. How much could you borrow versus how much should you borrow? And, you know, they're usually two different numbers. Now, the next conversation we look at is what do the repayments look like today? What could they look like in a year or 2 years' time? Should we be experiencing the sort of environment we're in now? You know, how does that look? Is that manageable? Is that, you know, doable without a massive change in lifestyle? You know, is that something that would be, you know, financially would put you under financial stress, for example? So, you know, they're the numbers that you've got to turn up with every month. So it's not even how much the rate is, how much the loan is. They're on your bank statement, of course, but the real number is what your repayment looks like. And as I said, that's coming out every month, whether you like it or not, and maybe it'll be going up considerably. So, you know, you got to be able to look at that number and go, yep, that's doable. I'm happy. I can sort of live the sort of life I want to live, even with that number coming out of my account.
In your most recent experience with clients that are coming off a really, really low base loan, they've probably had their loan for a couple of years, they have locked in a very, very low fixed interest rate. They're coming off now into either a variable or going back into a fixed interest rate. Is there difficulty around that transaction at the moment for some people?
Yeah, look, if you're staying with the same lender, it's just a natural process. So your fixed rate will expire. You'll be given a choice whether you go back to the relevant variable rate, or should you wish, you can then potentially look at whatever the fixed rates are on the table with that particular lender without any sort of reassessment or any paperwork required. Should you wish to change lenders, for example, to get a better deal somewhere, you're going through the full assessment process. Now, what you could borrow a couple of years ago in that lower interest rate environment might be significantly less than what you can borrow today. And in that case, you may well be stuck with that lender until such time as you either increase your income or pay down your loan or both. So, you know, you can be a bit of I think the term they use is a mortgage prisoner that's it. You can't move. So you've just got to suck it up. What we always try and do in that situation is go back to that lender and try and assist with repricing, getting in further discount we can for our clients. But at the end of the day, if they've got no option to go somewhere else, then that's where they're staying for the time being.
Yeah, well, I mean, it's good and bad, really, isn't it? I mean, it's better the devil. You don't have to go through that process again, but you just have to probably manage your finances a little bit better, a bit tighter.
Yeah.
I mean, coming off of that, where the media can help or hinder us in the marketplace. I feel as though the amount of interest the media has in the interest rate market and the mortgage market at the moment is sort of helping educate people.
Look, it's creating awareness, absolutely. There's no question. But also, because most people aren't particularly, I wouldn't say not financially savvy, but it's a complex space. So, and you don't know what you don't know. So it's one of those things where, sometimes too much information is dangerous. Of course, we see people going to lenders, just trying to get better deals here and there. And a consequence of that can be that they're getting all these hits on their credit file, for example. Now, the applications may or may not proceed, but every time you hit your credit file, effectively it deducts from your credit score. And then it can get to a point where, you refuse credit because you've got a checkered credit history of random applications, even though you may have never missed a payment. Your credit score could be getting sort of slowly trashed in the background because, you don't know what's happening. You're not aware that there's a sort of there's a consequence of, multiple applications, transferring credit card balances, all those sorts of things all create sort of little red flags on your credit file.
That's interesting, isn't it? Because there's something that no one really thinks about until they start the process, and then they wonder why they're being denied access to finance or as much as what they want.
That's right.
Yeah.
Look, some lenders issue automatic declines. I don't even pick it up. As soon as the system goes in, they pull the credit file. If the credit score is under a certain number, it's an auto decline. No reviews. Just see you later. Next. And that creates another hit on your credit file. So it can be a downward spiral. It can be a bloody disaster for some people.
Yeah.
It takes some time for that to be remediated on your credit file.
So at the moment, because it is a busy market with finance and people buying, selling, because it's been very active the last couple of years. What's the sort of time turnaround? Has there been have the banks been trying to slow down the process to slow demand and frustrate the market, or they've still been?
No, there's still a very competitive and healthy appetite for lending out there. So, the slower the market goes, the more aggressive the lenders get, effectively, because they're all trying to grow their share, grow their market share. So, slow market they hate because they've got to answer to their shareholders and their CEO, and they're going, drum up more business. We want more loans. We want to make more money. So it becomes then a cycle of discounting on variable rates, cashback offers all over the place. So it becomes a bit of a show, really. Who's got the best deal on the market at the time, and then but what then happens is some people are serial refinancers. They then start jumping from late lender to lender, potentially grabbing a couple of cashbacks, but in the background they're trashing their credit file as well. So it's one of those things with unintended consequences. The banks, of course, because of their appetite to grow their businesses and grow their books, they're kind of trashing the market at the same time. There's a lot of peripheral damage happening out there.
Yeah, I think sometimes people miss that it's a long game. It's not a short game. Dealing with property. Because like you said previously, the numbers are just so big. And the costs involved with buying a property are so onerous that it's funny that people think that they can do the quick turnaround on it.
there's always a prize at the end, whether it's a good prize or a bad prize.
Yeah.
That's the thing. There's going to be consequences. So you just need to be aware of what they are, and that's where getting really good advice as early as possible, can be a massive game changer for a lot of people, because you might not know you're making a mistake, so you're just going to carry on doing what you're doing, and then it's too late by the time you get there. This is more in relation to the credit file side of things, but once again, mistakes in property and borrowing can be very expensive and can take a long time to sort of repair. So, the more experts you have in your back pocket, the earlier you start those conversations, they can help you map out the process. They can give you time frames. They can make sure you don't make any, schoolboy errors. And, at the end of the day, you generally get a great result.
Yeah, oh, look, definitely. Look, I mean, every deal I do, it's got a different dynamic to it, and but having good people on your side really does help the process, and you usually do get a really good result, with saving time, money, pain.
I've got an old saying that I always sort of remember in this sort of situation. People were always talking about, for example, paying fees to buyers agents from wherever I go. If you think a professional is expensive, try using an amateur, and then see how you go. Professionals generally get the job done quickly, efficiently, smartly, and at the minimum cost you'd ever need to spend. And they'll generally earn back their fees by getting you, in your case, a better price for your product, a smoother transaction, and in the case of a mortgage broker, you'll generally get the best deal possibly available in the market at the time. So, and it'll happen on time as it needs to.
Yeah, so, totally agree. Yeah, excellent. Lovely. Well, thanks for your time again today, James. Really appreciate it.
Absolute pleasure. All the best. Chat to you soon. Thanks, Anne. Bye.